Introducing our new series of intimate in-person trading conferences in some of the greatest cities in America. It's Market Rebellion Live. Next up, this June in Sonoma County, California. Savor some of the finest wines in America while you level up your trading with Pete Najarian, Jon Najarian, AJ Monty, Ryan Mastro, and Bill Johnson. Sonoma is limited to just 25 seats to ensure every guest gets personal attention, so act now. Tickets are going fast.
Welcome to the Rebel's Edge Extra. That's the X, John. Extra.
The X. Let's do it.
There you go,
Johnny.
John is no stranger to television or podcasts, folks. In fact, he runs his own show on Newsmax Saturday at 10 p.m. and Sunday at 3 p.m. called Wise Guys. Yes, and I know that show will live up to its name because John is truly a wise guy. Been around Wall Street for almost as long as me. He is one of my go-to guys for unusual activity, in particular for stock loan. And that is something that John Tabacco, our guest today, is absolutely an expert on. He has testified in criminal cases, in lawsuits. And
I don't know about testified. Let's not go there. I do professional financial consulting for law firms when they're in lawsuits, and it relates to how their pension plans are getting ripped off by their prime brokers on their stock loan. But I'm not ever a testifying expert. I kind of operate behind the scenes, if you know what I mean, Johnny.
I do. And in fact, I'm going to be interviewing next week, John. I'm going to be interviewing Patrick Byrne at the Wall Street conference down in Miami at the Nobu Hotel, which is part of the Eden Rock and all that. But things sold out. But Patrick, brilliant guy. And so is our guest today, John Tabacco, folks. He has created a lot of systems that would help find locates for stocks and things like that, because he's been in the stock loan business, like I say, for a very long time. So, John, welcome to the show, to Rebel's Edge Extra. Security lending is something that not a lot of people understand, you know, whether they're borrowing stocks to sell them short or Bitcoin, and we can get into that. You have to find somebody, that's the locate. You have to find somebody to borrow this stuff from, right, John?
Yeah, listen, Johnny, that's why it's still the dirty little secret of Wall Street, the whole stock loan department, and, everything that emanates, all profits emanate basically these days out of the stock loan department, because whether it's lending out your stock or lending out the cash in your margin account and paying you 3% or 4%, and they're collecting 6 or 7%. The stock loan is the finance and the short. And a lot of people don't realize, you mentioned Patrick Byrne, if anybody out there knows the story of Don Quixote, he was out there, one of the first guys ever, tilting at the windmill of, hey, something's wrong here. People are allowed to short my stock who don't own it. Most of the media, including your former network, tried to paint the guy as a cuckoo bird, as a maniac. And I was right by his side, like Sancho Panza, as his expert, to fill in the blanks and tell him where the bodies were really buried. And, a lot of people don't realize, but Patrick forced the SEC to make some rule changes, Reg Show, and other amendments to Reg Show. And he also sued all the prime brokerages. He won every single case, 9 cases, for the shareholders of Overstock. And, just going back in the Wayback Machine, years ago, he sued Rocker Partners and Gradient because he felt like they were creating non-independent research, but representing otherwise. And he won that case too. So, when we see a lot of that still going on in the markets today, you got the bad guys who write the shitty research reports. You got the other guys who come into these founders and say, we're private equity. And then they give them this convertible debt with all these escalator clauses. And before you know it, they're in a debt spiral. And then you got the other guys who the established firms in the market making business, and they go out and try to get inflows of execution business by allowing people to unmitigated short without ever borrowing their shares. It's pervasive. It's as bad as I've ever seen it right now. And, I know we'll talk a little later about my platform, preborrows.com.
Yeah, we will have to. But folks, Jon has definitely created some of the industry leading platforms for finding these locates. And as you've heard, the stock loan business is a very profitable business because they have to find somebody who owns the shares. They lend them out to the short seller. So for instance, Jon, walk us through what happens when Bill Gates decides to short sell Tesla. Bill Gates says to his brokerage firm, I want to sell Tesla. I think it's overvalued. Fine. He can go out, but what does that brokerage firm that he's at have to do from the moment he sells Tesla short? What are they supposed to do by law in this country?
All right. Well, in Tesla, it's a widely held stock. So the stock is kind of easy to borrow. It's not like a premium name, right? But at most firms that are in compliance, if they were going to take a big institutional order and they know it was going to be on for term, they would go to a custody bank like State Street or BNY, and they would say, hey, you have a portfolio that wants to lend us 10 million shares of Tesla for like a year because Bill Gates wants to lop into this shit ass short position. I know it looks like he's winning, but I think in the end he loses. That's what I think. But in going back to the chain of custody, Bill Gates sells the shares that he does not own. He's betting the stock will go down. And then in 2 days on settlement, those folks that bought the shares, they're going to say, we want our shares. And Bill sold them short. So they would go to the custody bank and say, hey, those shares, give them to us. We have the right to give them to them. And it's all collateralized by cash. So it's riskless to the beneficial owner. That's what's supposed to happen. And in the big names.
But it doesn't always.
In the big names, it's irrelevant. Okay. In most instances. But as the names get smaller and the I call them the stocks du jour, get really, really viral, it opens the floodgates, look, this MSGM that we were talking about today, every morning, okay, I can look across 5 different brokers that lend out securities, right? And get baseline availability and a good measure on how much per share it's going to cost someone to buy that, to short that day. Okay. And just like every single day, 2 of them pop up to the top. And I keep looking at it and saying, this only has 3 million shares outstanding. There's like 1.7 in the float. At 8:45, there's already 34 million shares traded. It's just not possible. You know what I mean? If 35% on average of all volumes is shorting, then 10 million shares have been shorted versus a 1.7 million float. It's not possible. So, imagine if that wasn't happening. Something like Motor Game Sports, who had some good news. They converted some debt to equity, which is always good for the balance sheet and growing companies and stuff. Who knows? The stock could have been $40, but it's 22 and they're getting resistance right now.
Yeah. Well, that stock, folks, that Jon's talking about, MSGM, which is that motorsports games, as he said, that stock averages about 136,000 shares a day. Today, we're talking about the 31st of January. It has traded 44 million shares with 2 hours left in the trading day, which gives you an idea. 44 million versus 136,000. They are coming.
And guess what?
What?
Guess what, Johnny? The stock this morning, okay? I was able, if I wanted to, I may have borrowed a stock in position for 28 cents a share. Okay.
Okay.
At the time of the beginning of this taping, at the time of the beginning of this podcast, there were people charging $1 a share.
Buck a share.
$1 a share. So if you're shorting at $21, you actually shorted at $20.
Yep, you're already down a buck, and you did that on 100,000 shares. You're, yep, you paid 100 grand.
Most of those day traders, I don't know when this is gonna air, but most of those day traders, they got like 5-to-1 intraday leverage, but they got like 1-for-1 overnight leverage. So they usually run this game, in the light of day, but by they turn into a pumpkin at 3:59:59, and at the end of the day, if longs keep coming in this thing, this MSGM, I think that you could have another explosive day tomorrow. Let's just put it that way. And end of day might be a madhouse today.
Oh yeah. Well, and John, there's a lot of people who are seeing these kind of short squeezes. Of course, during COVID, when so many people were locked up, not in jail, but locked in their houses, they were basically deciding, well, what about these apes? I'm hearing about these apes, and they are basically putting on the short squeeze in AMC or in Bed Bath and Beyond or any of the so-called meme stocks. People just saw how big the short interests were, and a couple leaders of that charge would just get in there and start buying up shares and try to squeeze them, try to squeeze out the so-called pros, and in many cases did exactly that.
Yeah, I think what it takes sometimes is some organic news. You got some of these market makers out there like the Susquehannas of the world and others that they're running their same game every single day. They're just hitting the buttons. They're playing the thing from the short side. They come out with good news. We see the company come out with good news. Maybe they lay off a little bit. They let it run. As soon as they see the retail settle down, then they start laying into it again to bring it back to where it belongs. So it's like a game for them, right? But if you get caught a little bit of sleep, it's a switch. And then you got some real organic retail buying that comes in that believes in the fundamentals or otherwise, and you get caught off guard, your balls are in a vice. Covering ain't pretty, and getting bought in 2 days from now ain't pretty either. So, I actually think some of these ape-like people, they, them, whatever their pronouns are, they're awesome people. It's the first time I've ever seen like massively cuckoo liberal guy and massively cuckoo neoconservative guy, and they're all on the same space call saying how great they are because they're going to team up and beat the shorts. So it's almost, as an American, it's almost a unifying experience. And everybody's talking about, the 3-letter agencies being weaponized, the FBI, this, that, the other thing. The SEC is a 3-letter agency too. And that, to me, has been weaponized against the retail shareholders, who their one charge in this is to protect the retail investor. So, as I mentioned before, there's a big uprising coming up, okay? And one guy I know, Jeremy Fromer, he used to be the owner of Carlin Trading, big day trading shop, big option traders. He started a coalition of CEOs and issuers who feel like that they're running good fundamental companies, and every time they have good news, the naked shorts crush them. And it's called CEO Block. Okay. There's a lot of charlatans running around that side of the business, John. You know, these penny stock hucksters and this and that and the other thing. So I got to sift through them because the cause is real. It doesn't mean every case is generically the same. But Jeremy's asked me to start consulting CEO Block. So I'm going to start giving issuers, CEOs of companies, simple advice to tidy up the way them and their shareholders protect their shares from being lent, and then how to alert different agencies when they have good news and they see unusual activity. They can file a suspicious activity report, and then they can start to ask for some of the related information to say, well, if we only had 3 million shares, how would 10 million shorted? So CEO Block, I think, is going to be a big thing. And I think we're going to get the apes. We're going to occupy the SEC, and we're going to rid Wall Street of naked short selling once and for all. And it'll be a big win for retail investors. That's for sure.
Yeah. Well, talk just a little bit more maybe about that Occupy SEC that's going on, because just like you said, this is a group that has organically come together and they have a common cause. The common cause is let's go after these guys. Let's make senators and House representatives and so forth aware of the problem and how massive it is and how they drive some of these companies basically to bankruptcy.
John, you know, you mentioned Patrick Byrne before. He's one of my dearest friends in life. We're cosmic brothers. Okay. I worked for Overstock.com as a consultant for 20 years. I consider him in my top mentors in life. You know, I worked for Patrick Byrne and I worked for Vincent Viola. So I had some serious bosses in life, right?
Yeah, very much so.
But Patrick taught me so much about philosophy, about how to apply kind of the natural world around us to what's happening, and really about free markets, so much about it. And he gave me this example. He said, you know why the regulators don't care about naked shorting? It's like the sugar cartel, he said. He said, you know, in the rest of the world, sugar is 30 cents a pound. But when it comes to New York, it's 60 cents. When it comes to America, it's 60 cents a pound. And that's a 30-cent tax from the top 5 sugar companies in America. And no one cares because it's about $18 a person every year. You don't realize you're getting charged another 30 cents. So he says a fractional injury, but the $5 or $6 billion a year that gets paid goes to 5 or 6 companies. So they make all the billions, right? So it's a fractional injury. It's a fractional injury, and it's a concentrated benefit. So if the concentrated benefits to the, you know, dark pools and market makers and hedge funds that can naked short the shit out of a stock. And the other side are the suckers like us putting 2 tablespoons of sugar on our Raisin Bran. But we don't complain because nobody's going to listen to us for $18. So to me, the regulators are captured by the big firms. Most of the people are sitting over there trying to get 5 years in so they can go apply at one of the hedge funds to get a job over there in compliance or some other bullshit, right? Yep. So they don't have any incentive to really regulate where they intend to go work. And I've been fighting about it for 20 years, and I've been mostly right. And I'll say that on the record. And I followed Patrick's lead. And he, like I said, he taught me so much. But on this topic, we worked as a tandem, and we know what's happening in real time. I think an uprising of the people, just like, hey, listen, people stood up against the masks. People protested against the vaccine mandates. You know, people are still protesting against funding Ukraine, right? People's voices matter. And I'm talking to this community. Like I said, I'm joining. I've been invited to join the founders advisory board of the CEO block and try to point them in the right direction. And, you know, there's simple tips that people can do and scare the shit out of the shorts. And, you know, I think that help is on the way, but the regulator is such a monolith that they're hard to beat.
Well, folks, you're hearing it from a guy who practices this every day, and that is John Tabacco. Like I said, when I got that text from John this morning about MSGM, which is this motorsports games company, people had feasted on this. And I'm not saying that I have no relationship with that company. So I'm not trying to hold it up or anything else, but I'm just saying they've driven it down from triple figures, from over $100 a share to the single digits. And now they're getting, at least for a day or two, a big comeuppance as the shorts are getting squeezed and squeezed hard. So it will be interesting, John, to see how this one closes today. And I really appreciate you bringing this to us. We'll put links to you and to the future companies that you've been establishing. Really appreciate your time. Remember, you can see John on Wise Guys, that airs Saturdays at 10 p.m. on Newsmax or Sundays at 3 p.m. on Newsmax. Wise Guys with the one and only Jon Tabacco. John, thank you for your time today.
Jon Najarian, thank you so much.